cmpradio.net. It's the station.
Hello out there. How you guys been? Sorry about 2 weeks ago. Technical difficulties on my end. I apologize for that. How y'all doing out there today? Hope everybody doing great. You woke up this morning. That's what my lovely brother would say. Producing this show. Ain't that right, good sir? Woke up breathing. You woke up blessed. You woke up with a mission and a plan. And you got a 24 hours to enact it. And God willing, you get another 24 if you wake up again tomorrow. So, how y'all doing? It's King Annais here. Back with another episode. Stock 101. Like I stated to you before, I'm not a financial advisor, not a financial professional. I'm just out here trying to give information to my people. Information that's needed, especially right now. We go back all the way to episode 1, and the reason why I did this is because I noticed that there's a lot of things going on that's coming into my people when it comes to, playing, spending money, gambling, different types of apps, things like that. And I said, why not? Why don't we really take a look and see what we really have and see what's out there and what we can really do with our money? Whereas that we're either giving back to the community or trying to make something, to build something to give back to our community. So that's why I started this podcast. So, if you don't know by now, this is Stock 101, and we did a couple things. We had a couple episodes before. One was teach you guys what a stock was. It's basically ownership of a company, a piece of ownership in a company. Then I brought you into episode 2, where we learned where stocks live. That's the NASDAQ and the New York Stock Exchange, and how they're measured by the SP 500, Basically, the top 500 stocks running right now, dealing with multiple different industries. But today, we're going to get practical. Today, in episode 3, we're going to answer the question that every beginner wants to know. Okay, but how do I actually buy one? How do you buy a stock? And it's easy. It's a step-by-step process where you can go about purchasing your first stock. I mentioned it before when JP asked that question on episode 1. Where do we actually go buy one at? I told him where, but I said we'll get into that later episodes. Well, this is that later episode. So let's get started. What you need? You need a broker, a.k.a. the middleman, a.k.a. an app, a.k.a. somebody there that can present the money that you want to put up for you. First thing is that you can't just walk into the New York Stock Exchange with a handful of money and be like, hey, here you go. This is what I need. I'm trying to get, trying to buy stock in X, Y, and Z. Here's $50. Make it work. Nah, it don't work like that. You need something called a middleman or a broker. Before we get into that, they got ads running on your Facebook, ads running on your Instagram, ads running on your TikTok, ads running on your Twitter, aka X. I mean, ads even running on every other application you got, and they're showing you, asking you to invest into this company, that company. I just saw Skybound, aka Invincibles and The Walking Dead's presenting company, and they're asking for people that want to invest in them, people that want to take part in purchasing shares of the company now before it gets big. I've done that. I did that with High Times before they went live. I have stock in High Times now. Is it growing? I haven't looked at it in a while. It might be, might not be, but I know it's something that I've invested in, and if I wanted to put more money in, I would gain more shares, initial shares from the initial offer. But you can either do that. I did that right through the company, but they still had someone else offering me the ability to buy that stock on my behalf. That's what broker. Broker is a company that is licensed to buy and sell stocks on your behalf. When you open an account with them, you deposit money, then use their platform to place different orders. They handle all the behind-the-scenes stuff, connect the account to the exchange, execute the trade, and hold your shares for you. Now, think of it as a real estate agent. Theoretically, you're navigating your way buying a house completely alone, but you practice it with an agent who knows the system and handles your transactions for you. Now, there are a lot of brokers out there. Some, they just handle the procedure, don't offer you any fees, just let you know this is what it is. But when it's time for you to pull it out, sometimes you gotta pay a fee. 9 times out of 10 you do, 9 times out of 10 you don't. The different type of brokers that we may have heard about is Fidelity and Charles Schwab. They're the two biggest ones and they're most established. They've been around for decades. They have great customer service. They're great choice for beginners, and they're reliable. They're reliable on full platforms. Robinhood is a newer one. They exploded popularity because it's a simple, clean interface, and it's great for beginners that want to do something easy and navigate on their phones. That's one thing that I showed JP when I was talking about Lucid. That's where I got my shares from. I have shares there, and I have shares through Cash App also. There's other ones out there as well as too, like Coinbase, Crypto.com, and many others. TD Ameritrade, now they merged with Schwab, and they've been going through one of the longest ones with the best education and research tools, meaning that there's many different things out there showing you and teaching you how to look at stocks. I know there's a lot of YouTubers out there, that teach you about day trading and things of that nature, watching trends and things like that. But right now, we just talk about the major brokers, and they also offer commission-free trading, meaning that you don't pay a fee every time you buy or sell a stock. If that wasn't the case, it used to cost $5 to $10 per trade, which is genuinely a good thing for a beginner. It's not really much, but all right. Let me give you a full definition. Ready? All right, get your pens and papers out. A brokerage account. An account you open with a broker firm that lets you deposit money and use it to buy and sell investments like stocks, ETFs, and bonds. ETFs and bonds, we'll get into that later. We're just talking about the stocks right now. It's different from a bank account. The money in there is used for investing and not everyday spending. Opening one usually is free and takes about 10 minutes to do it online. Now, as I said, the brokerage account. Think of it as a separate account from your checking and your savings and your high yield savings if you got one of those. Whereas that the money that you put in there is just used strictly for investing. Meaning, this account that I have, I can put X amount of dollars into it. And I use this account only to buy, sell, and trade stocks with. That's it. That's all it's used for. Yeah, I can pull the money out and take that money and put it into my bank account. Then I can utilize it the way I want. But just for this instance, it's just separate in that one account. Now, opening an account is simpler than people really think. Basically looks like this. You go to a website, a broker's website, or download their app, click open an account, and you'll be asked basic information. the basic information from your name, your social, to where you work at. And it's standard for you to verify yourself. Once you choose the type of account you want, most beginners, they go for an individual taxable brokerage account. It's a regular investment account. You see many options like IRAs, retirement accounts with tax advantages, but we'll cover that later on. But right now, just a standard account is fine. So, most of you guys, when you get work with one of these big Fortune 500 companies, they give you ability to buy stocks in an employee rate, and they automatically help you and create. All you need to do is just formally sign in and set up your brokerage account. I have one with Fidelity right now, and I also have it with the place that I work at currently too. But it also links it to where is that my past companies that I've worked with, if I had purchased stock or had stock options previously taken out of my account, it goes in there. And it's always connected, and I can take it, roll it over, use it however I want, which I've done recently. But once you open the account, you fund it. No one funds it but you. So I basically have mine set up to where that it takes a portion of my check, pre-tax, meaning before they take out the tax. That gross amount that you get, not your net pay, not the pay you get after, the gross, the one that they go by with everything in this country, and they take it right out. I link my bank account to it. You can link your bank account to it and transfer money in it. It could be 50, it could be 500, whatever you're comfortable with. Brokerage accounts don't have a minimum deposit, so there's no magic money you need to start with. But that's it. Open an account, money in, you're ready to buy. That's the beauty about it. Like, it's really just that simple. Let's go back to the start of the pandemic, and let's go back to where some people got that PUA money. They did it stupidly. And then you go back to where, when Trump gave us, what are some things they used to call, what they call, I forgot the name of them, what he would give out. Basically, when Trump gave us that extra bit of bread, a lot of people, spent it on, themselves, spent it on their families, got things that they needed. Some people invested it. I mean, it was free money. Some people had in mind, let me put this money to work for me so I can make more money afterwards. And that's where you had some of those people that invested in GameStop when it was cheap. Some people was paying attention like me, and I invested in AMC when it was cheap, and knowing what was going on and how, they were still open and still moving. And when it came to GameStop, people were still open, playing games, buying games. We stuck in the house. Obviously, they the biggest ones selling games at the time. That's the only thing that was shipping, or buying it digitally, things like that. And they were able to look at that stock, AMC stock, GameStop stock, looked at what the ticker symbol was, and was able to invest in that company. And that's where we go in. Before you place your first order, you got to look and read a stock listing. A lot of people, and this is what I've been getting a lot before, phone calls in my inbox about even doing this podcast. People was asking me, "Oh, you basically understand, what the numbers are when you see it. You should let people know." I was gatekeeping. I was like, nah, they can figure it out. But I was like, no, let me feed my people with this information. So since I was, I'm going back to Miss Reed's class. Shout out Miss Reed. Shout out everybody that was in my 4th grade class. Miss Reed, she's the one that told us, to really take a look at your world, watch the news in the morning, read the paper, things like that, get information and bring in articles, things like that. And it spread all the way throughout my high school years, my middle school years and high school years. And the one thing I noticed was the ticker. When they talked about the S&P 500 and this, that, and the third, and I really wanted to know what things were. So I looked at it like this. We're gonna use Google for one. All right. So Google, first thing you see is the ticker symbol. Now Google's ticker symbol is called Alphabet. That's what it is, Alphabet. I mean, you can really go on your phone right now or on your computer, open up another tab, type in Google's ticker name, ticket symbol. It'll be Alphabet. Basically, it's the short code that represents the company on an exchange. For instance, Apple's is AAPL. Tesla's is TSLA. Every publicly traded company has one. So, we're going to use that for instance. Now, next is the stock price. What one share currently costs. So, that's the number right below the ticket, right below the ticker symbol. So, you'll see the ticker symbol, then you see a number. It could be however much with the decimal point and any numbers after it. For instance, let's say just say for this occurrence, let's say the price under Google, under Alphabet, is $15. And it's rising. But it's starting at $15 flat. Meaning that I can go in, put in $15, I own one share of that company. Now, you'll also see between the ticker price, between the ticker symbol and the stock price, you'll see the daily change rate. How much the price has moved since the market opened this morning. If it says plus 20, plus $1, let's say plus $1.20, or 2.7%, that means that the stock went up $1.20 from yesterday's closing price. So that means that now it opened at the market at $15, but it closed yesterday with $1.20 more than what it was showing previously. That means that that stock at that time was $14.20. No, is my math right? Hold on. Yes, $14.20. If I'm wrong, help me out in the comments. If I'm wrong with that pricing algorithm, but basically that means that it closed yesterday at that price. Now this is the new price, and it'll also show how much it'll move during the day while the market is open. Now, then there's the volume. As I said, how many shares have been traded today? High volume means there's a lot of activity. Low volume means it's pretty quiet for that stock today. Then, next, you'll see a line at the bottom of it where you see, the needle going up and down, everything like that. You'll see a line. The line is the 52-week high and low. The highest and the lowest price the stock has hit over the past year. You have it for 1 day. You have it for 1 week. You have it for 3. You have it for 5. You have it until a full year. Now, if that stock has been trading near a 52-week low, it might be in a rough patch. If it's near a high, that means it may be on a run. I'll go into, looking at the highs and lows and the runs and the walks in a later episode. That might need a couple charts, and I might have to work with JP on, me set up those charts so y'all can physically see what I'm talking about. Or we can sit here and work together and go on to a separate screen so you can actually see what I mean. And finally is the market cap, short for market capitalization. This is the total value of the company calculated by the multiplying of the stock price by the number of total shares. It also tells you the company size. A market cap is over 10 billion. A market cap over 10 billion is considered a large cap company. Under 2 billion is a small cap. In between is a mid cap. You don't need to memorize all of that. But I'm just letting you see what a stock page may look like so it become more natural so what you're seeing. So that area that I was talking about is usually right below the chart. And it gives you numbers of, numbers of what's going on within that company. So I've been doing this for quite a while. I've been playing around with stocks, and I understand what everything is. Now that you got your account, you got your money, and you found a stock you want to buy, now you need to place an order. It's like going through a drive-thru. You look at the menu, see what you want, see how much money you got. All right, I want X, Y, and Z. Okay, X, Y, and Z is going to cost you this much. Pull up to the next window. Now, This is where beginners get tripped up because it's more than just one type of order. I'm gonna let you go through. I'm gonna bring it to you. I'm gonna bring it to you the best way I can. One thing is the market order. It's the most simplest type of order there is. Basically, you saying, I want to buy this stock right now. Whatever the current prices is, I want that. The trade is executed almost instantly to the best available price on the market. Now, granted, that price is changing every single millisecond. I mean, quickly changing. In order for beginners to get used to this, the most simulation is perfectly fine. The only minor downside is that the market is always fast moving, so the price you may pay may end up being slightly different than what you saw on the screen a second earlier. But for stable companies, the tiny difference is usually tiny. We talking pennies. I mean pennies on the dollar. Now, mind you, we got rid of pennies. Side note, if you do have your pennies left, that's copper. Hold all your copper. Don't trade it in for dollars just yet. Something's coming. Just wait for it. But anyway, that's neither here nor there. That's another time, another topic, another idea. Next is a limited order, which gives you more control. Saying I want to buy this stock. It's saying I want to buy this stock, but only if the price is at or below a certain amount. So that means if Google is trading at $45, but you only want to pay $43, you set your limit order to $43. And if the price drops to $43 or lower, your order is executed. But if it never hits $43, the order just sits there in waiting or expires at the end of the day, depending on your setting. Limit orders are great when you have a specific price in mind and you want to buy that stock that doesn't trade as frequently as the price jumps more and more. For you, the first purchaser, a market order is completely fine. Just keep it simple. Now, see, I don't do limit orders. I've never done a limit order. I've never set a limit on what I think a stock can do. That's really playing around with the market and really playing around with what people are investing in at that time. Like one thing, for instance, is the maker of the Pokemon cards. Now there's been a revival of buying cards and selling cards, even trading cards in general. So when you look at those companies that manufacture them, if they're on the stock down in ticker, you see how they move, you see how they work. Put a limit order in, set the limit where you want it at, let it roll. If it doesn't go through by the end of day is 4:00. I repeat, the end of day for buying stocks in the United States is 4:00, meaning that after 4:00, if you put an order in, no matter if it's a limit order, only matter if it's a market type order, if it's not in by 4:00, the end of business day, it will be executed the next day at 9 a.m. I repeat, if you put a market order in after the stock market closes at 4 p.m., your stock order will take place the next business day. Meaning that whatever changes happen on the outside during markets closing, your transaction will take place then. Limit orders only go to the limit of the end of day of business. That's when they expire. That's the difference. A market order can be used and taken at any given time during a day, whether it's during business hours or after business hours. But a limit order only is done during the time that the market is open. Just keep that in mind. All right. Now let's put it all together. I know it's a lot. But let's put it together. All right. Here we go. Now, putting it all together, you buy your first stock, start to finish. Open a brokerage account. Make sure your account is funded. Next, search the company you want to buy. Search for that that name or the ticker symbol. Cool. Review the stock page. Check the current price. Check the 52-week range and the market cap. Make sure you're looking at the right company. There are a lot of similar companies out there named similar on the market. Make sure you're looking at the right one you want to buy. Another side note, sometimes mistakes are profitable. Sometimes mistakes aren't profitable. Read what you see. Now, Now you tap or click buy. Choose the order. As a beginner, choose a market order. If you feel that you really understand what I just said out my mouth, and you like, you know what? I'm gonna play with a limit. See how that goes. Go ahead and do that. It's up to you. Like I said, I'm not a financial advisor, but just saying, do beginner's work so you become great at it. Then you can play around with it the way you want, because it's your money. It's my money, and I want it now. Now, enter the number of shares you want to buy. Some brokers let you buy by the dollar amount instead of one share. Or you can say, I want $50 worth. This is called a fractional share. This is great because it means that you can invest in expensive stocks like Google and Amazon, but not needing hundreds of thousands of dollars to really gain one single share. Yes, you still make money. You can still make money off of fractional shares. That's really how some of these brokerages work. They want you to just put money into it, constantly put money into it. Before you know it, you gain the price of having one share of that company. Next, review your order. Double check it, the number of shares and the estimated cost. Triple check it. Check the company, check the number of shares, estimated amount of cost. Quadruple check it. Review your order, check the company, and make sure this is what you want. Then hit confirm and submit. In a matter of seconds, you'll own stock in a real company. Your broker should share your details of the account and from that point on, and if the company does well, you do too. Now, it's a risk and reward. Sorry guys, I'm fighting allergies right now, so my nose is stopped up. It's a lot. My eyes are itchy, watery. It's a lot going on. But just make sure that it's something that you want. I understand, following trends and seeing what everybody else is doing, but do your own research. That's what I always say. Do your own research. Look into what you want to invest in. Look into each specific company. Look into what you want, how much you want to spend. What they say, the world is your oyster. It's all on how you want to crack it. You might crack it open, see what's going on. You might find a pearl. You might find that one company, that one stock, that one thing that is hidden. Like when P asked me about what stocks I invest in, and I let him know. I'm going to put y'all on a little game, too. Now, I want y'all to do your own research. We're going to take it back about 4 months. Remember that our great country was thinking about putting a moon base on the moon? Now, granted, it's going to be a joint venture between us and other countries, not just, just the United States. But look into those companies that would be useful for building something on the moon. Boeing. A couple other companies I'm not mentioning or naming. I need you to do your own research. I'm just telling you, put your foot in the door by giving you Boeing. But yeah, look into that and really see what and where it goes. Basically what I'm saying is that don't look at SpaceX as the one thing to get. Look at those providing the infrastructure needed for SpaceX to build. That's just a little gems I'm trying to give y'all every show. I was able to get that off without JP giving me a cue. I was able to give you that. But before we wrap up, there's more things that I want you guys to know. Like I said before, the United States stock market is open Monday through Friday, 9 a.m. to 4 p.m. Eastern Standard Time. Holidays count, weekends count. So if you put in an order at 4:01 Eastern Standard Time on a Friday, that order is going to be placed the next opening day, which means that you will have to wait till Monday at 9:30 for that to go through. Those hours are queued and they're executed when the market's open. Some of those brokers offer pre-market and after-hour trading, but as a beginner, don't worry about it. I've done it multiple times. There's times where I said I'm home, I'm looking at the stock, I'm seeing something cute. I mean, like a big name stock or something up and coming for $1.50, and it ended at $1.50, and I know that this stock is going to creep up to at least fivefold of that. That means I know that come opening market, by the end of that day, that stock gonna be $6.50. It's a come up. It's something small, but it's a come up. I'm gonna buy as many shares as I can for $1.50, because I know it's gonna give me some type of gain later. Now, the most important thing, just because you can buy a stock doesn't mean you should buy a stock without thinking about it. Now, the next few episodes, I'm going to talk about, how to evaluate whether a stock's a good investment, how to manage risk, and how to build a plan. Buying stocks is easy, but buying the right stocks for the right reasons at the right time is hard. It's really more about understanding what's going on in the world around you and paying attention to current and world events. Like I said, shout out to Miss Reed in my 4th grade class. Us getting those daily events and really understanding what's going on in my world. That's how I got into this, understanding what and how the world plays. Now, let's get a recap real quick before we go. To buy a stock, you need a brokerage account, such as Fidelity, Schwab, Robinhood. Open one of these accounts. It's free. It takes about up to 10 minutes, depending on how fast you move and type. Once you fund the account, you find the stock, read the basic listing information, the ticker price, the volume, the market cap, and choose the type of order you want, whether it be a market order or a limit order, then hit buy. Market orders are perfect, they're simple, and they're great for beginners. Limited orders give you more of a price control of how much money you want to spend out your pocket. As a review, stock's 45, I'm only want to pay 43. If it gets 43 or lower, it's gonna execute it. If it's 43 or higher, it's gonna sit and wait, and it's gonna expire by the next business day. So, like I said, the next episode we're gonna talk about every investor needing to understand before they put a single dollar in the market, which is risk. I mean, listen, you guys go on TikTok Shop, find things on there, and just immediately buy it, taking a risk. You guys sit here and go down to the casino, or you got a casino app on your phone, or you sit there gambling on a sports match, you're taking a risk, because you can either win or you either lose. So y'all should already understand what it means for taking a risk, but let me show y'all how it works in the stock market game. What is it? How to think about it? How can diversification protect you? That's the whole. This is one of the most important episodes of the series. So I advise you to tune in. Like I said, we see you in about 2 weeks. I apologize for the delay. The last 2 weeks, it was just a lot going on my end. But, life happens. So, but that's all I got for y'all this evening. I thank y'all for tuning in. Like I said, it's King Annais, Stock Market 101.